What's up, everybody? We have some big potential legislation to ban China's TikTok in the US. I'm going to talk about what that could mean for Meta's stock and how investors should think about this moving forward. Does this mean that Meta is a screaming buy? What should we do? All right, here is the article. It came out today, December 13th, 2:26 p.m. Republican Senator Marco Rubio on Tuesday announced bipartisan legislation to ban China's popular social media app TikTok, ratcheting up pressure on owner ByteDance Limited amid U.S. fears that the app could be used to spy on Americans. It would block all transactions from any social media company in or under the influence of China and Russia. But it's not just politicians, right? At a hearing last month, the FBI director, Chris Wray, said TikTok's U.S. operations raised national security concerns, flagging the risk that the Chinese government could harness it to influence users or control their devices. Alabama and Utah on Monday joined other U.S. states prohibiting the use of TikTok on state government devices and computer networks due to national security concerns. So, what does all this mean for Meta and Meta stock, right? Meta shareholders. Full transparency. I'm talking about Meta stock today. I do own shares. I always share my portfolio here on the channel. Not so you can copy me. I'm not even saying you should buy what I buy. Make your own decisions. But I just want to be transparent with what I own and the performance, so you know who you're listening to and you know what my biases are. Meta is my largest position. Portfolio is at $117,000, up about $1,500 today. All time, we are still down $15,828. We started the portfolio on February 15th, 2022. So that's where we're at. But Meta, $24,000 position. You can see we've got 205 shares, average share price of $130, and the current price is $120. So we're down, I don't know, around whatever, 8%. Let's talk about what this means for Meta though, because as we know, Meta has Facebook and Facebook's properties. It's a lot of advertising. They've got Instagram, they have Reels. So, TikTok is some major competition for attention and advertising dollars. And that's been a lot of the fear around the stock, as well as investors not liking the investments in AR and VR and Oculus. And so there's that whole side of it, which they're going to continue spending money on that, at least for now. And so that kind of overhang will continue. But we're already seeing some of the competitive overhang and, the fear, the narrative that Facebook is dying, Instagram is dying, and, Meta's just basically going to crumble to zero because everybody's going to stop using the app. This is Staccato. He shared this out on Twitter. I think he got it from this guy, Eric Seufert, who is an analyst at Mobile Deb Memo. So again, that's where this information is coming from. But US installs of TikTok were down by nearly 13%, while WhatsApp installs in the US grew by 13%, and Instagram worldwide installs increased by 12%. And it's interesting, right? So we could see number of installs in November 2022 for TikTok worldwide is 54,566,000, whereas Instagram was still at 62 million. Facebook was at 51 million and WhatsApp was at 40 million. And so it's just incredible that Facebook has those properties that have, that many installs every single month still. And yes, TikTok is a threat for sure, but just look at the total number of installs they're getting there. And so that's great, right? The app is clearly not dying. Their platforms, their family of apps is not dying. Now, what about valuation and growth, right? And so one way we could look at Facebook is through a PE multiple. We can see it's trading at a blended price to earnings ratio of about 12.3. Price earnings is a way that we measure stocks, right? It's hard to find. The average PE ratio since 2012 has been almost 35. And so we're at 12 right now. But I don't expect it to get back to 35, right? Because if the earnings growth rate has been about 28%, and as we forecast it forward, this has analyst expectations for earnings for 2022, 23, and 24. As we forecast that forward, if we look at a PE ratio of just 15, which is, in my opinion, very fair, and earnings growth of 24% in 2024, then you're looking at a 32% total return between now and then for a 14.6% annualized, and that would be a price of $152 a share at that time, up from like $115 today. But let's go out a little further, right? So say beyond that, in the next years, beyond the years that they have templated here, we get, just 10% earnings growth for Facebook over that time, ending 2028 at an EPS of $13.63 per share. At a PE of 12, which is about even with today, you're looking at an annualized return of 7.3%. So I actually feel comfortable with that as like a pretty bear case type scenario. I guess their earnings could be slower than that, but they could also be better than that if things turn around. All the way up to a PE of 16.7, you're looking at an annualized return of 12%. Now that's with these negative growth in earnings next year, pretty strong growth in 24, but then only 1% in 2025, and then 10% for the next 3 years after that. And if we look at analyst expectations, this goes out to 2026. This is from Ticker. They're actually expecting $12.74 in earnings in 2026, which is way above what we have here. We don't have it getting to $12 until 2027, and then just $13.63 in 2028. So I think we're being pretty conservative with this scenario, and we're still looking at an annualized rate of return of somewhere between 7 and 10 to 12%. And so with the style of company that Meta is, with their balance sheet, that's the other thing. As of Q3 2022, they've got total assets of $178 billion. Total liabilities of just $54 billion, no debt, and then cash and cash equivalents of $42 billion. Now, we're looking at free cash flow here, right? And again, we can see December 21, they had free cash flow of $39 billion. December 31st, 2022, expected to have $17.5 billion, so a definite drop there, right? And then down to $15 billion in 2023. But then look, free cash flow growth is expected to pick up again and be back to $47 billion in 2026. These are just estimates, right? And estimates can be wrong. So even though the stock price is down a lot, because their free cash flow growth has dropped and free cash flow has dropped, it really hasn't gone down price free cash flow at all. In fact, it's gone up. So it was at 24.5 in 2021, September 2021, and now we're sitting at 29.58. So it's gone up. Why? Because free cash flow has dropped and the stock price has dropped, but free cash flow has dropped, more than the stock price has made up for it. So that's why we're seeing a lot of the sell-off, right? This is what Morningstar says. They say it's a 5-star rated stock, and that's just based on valuation. They think shares are significantly undervalued. This is as of October 27th, so we might see an update here. Maybe this will get brought down, but significantly valued at a 56% discount. They call the fair value 260. I think that's way too high. They give it a wide economic moat because it's really tough to build up the user base that they've built up. Exemplary capital allocation, and they did call out some, regulatory fines and some GDPR issues. But if Facebook has to deal with it, so is everybody else, and the people with the strongest balance sheets are going to do the best. And so, basically where I land is that I think Facebook is in a good position. They have a strong business, which is the advertising business. It has great margins, still very strong cash flow. They're investing that to improve the platform, invest in Reels to compete with things like TikTok and short form video, keep Instagram relevant. And then you kind of get the bonus or the upside of if the metaverse works out, if AR, VR works out, if they're really able to nail that and become the platform that happens on, then you almost have the potential to invest in Meta right now at what might be like an Apple moment back. It was like 2016 or something like that when Apple was trying to make the transition to more of like a platform company and introduced software and different subscription services. That could be the type of future that Meta could have too, if they really nail this and get it right. And then if TikTok competition, whether it gets banned or not, if it just starts to slow and people are less interested in it, then Meta still has 3 fantastic properties with more than 1 billion users each that they can continue monetizing and improving. And so back to my portfolio here, you can see that, right now, Meta is a $25,000 position. It's about 21% of the portfolio. I don't feel the need to keep adding to it. It's a large enough position for me. I do add money to this over time, but I want it to eventually be around like a 10% or so position. And so I'm happy with the money I put into it. I'm not going to continue chasing it down or anything like that. If the stock doubles from here, triples from here, whatever, then I've got enough invested for it to make a difference. And I own a lot of other great companies too. Let me know if there's any stocks you want me to review. If you leave it in the comments, I will review one of the stocks that somebody in the comments asked me for. Have a great day.